Now, sticking with the equity scene, Pick n Pay strategy is yielding results. This as the retailer has narrowed its annual losses, but the firm has said that it expects to break even in 2028, a year later than initially planned. Earlier, we unpacked the numbers and got insight into the group's strategy with a company CEO, Sean Summers.
As I said earlier in the presentations today, that our journey as a company in turning Pick n Pay around has to be a considered one. And we can't be distracted by some short-term wins just to get to a number on a date. You know, when the original guidance was given, it was given on a basis almost not of guesswork, but just kind of an instinct at the time. And I indicated when I returned on the 18th of October, 2023, that it would be a multi-year journey. And my best estimate or guess at that stage would be about 3 years. In fact, Shane Watkins from All Weather Capital said Sean is going to be closer to 5. Don't put pressure on yourself. So I agreed with Shane today. We split the difference at 4.
And I definitely know we do have Shane Watkins on the show quite a few times. I definitely do know that he is betting on the turnaround of Pick n Pay. Well, I mean, just talking about the fact that this is a multi-year strategy, how much of that financial recovery was due to Pick n Pay's trading wins outside of the benefits of the recapitalization?
Well, that's the really encouraging part, because for me, the most important number that I look like is like-for-like sales growth of customer count. Because, you know, it's customers coming back into our store and frequenting our stores again. When I have a look at that, it is really, really strong and continues to grow. So even now, I mean, we're in a 5-week period now. So if I take the first 13 weeks this week, 12 weeks of this financial year, we can see that that trend has continued to grow. And, you know, we need to win our customers back into Pick n Pay, customer at a time, changing the narrative, changing the urban legend. And without doubt, we can start to see that changing. We are seeing that in terms in our call center. If I monitor the inbound compliments, you know, it's rare that you get that level of compliments coming in, which is fantastic. And when I have a look at the level of complaints, those have also dropped off dramatically. Are we perfect yet? No way at all. Is there still a long journey to go here? Absolutely.
Sean, I understand that as a business that the point is not to make paper-thin margins, but at the same time, the competition in the retail space is very, very tight, and consumers are still not out of the woods yet. I mean, you look at some of the pricing on Pick n Pay not being as competitive as the other retailers in the space. So what is informing Pick n Pay's strategy on its selling prices in this tight competitive landscape?
That's the first thing. I can tell you now definitively, we are competitive in the retail space, and all of the independent surveys would show that. Many of the houses that watch the numbers closely, the financial analysts and the like, so we monitor those reports independently because I'm always wary of people that mark their own homework. So on that basis, we are much, much more competitive, and we are market equaling in terms of our competitivity.
Sure, not to fight, but I do have my own experience in that because a few months ago, I think about 2 months ago, I was on ASAP and I actually was looking for a face cream, and it was 50 Rand more than a competitor. So I'm just speaking also to that personal experience. I do understand that you have your own reports. So how are you looking at those experiences?
I think, you know, if you look across the tens of thousands of SKUs that we all sell, you're always going to find one where there's going to be a differential. And so, you know, that we have to deal with, but that doesn't indicate that that is just a generalization across the piece at all. When we have a look at our like-for-like sales growth in the stores over and above customer footfall, you know, with 40 less stores in our company this year, an opposition space that's opened up, I think it's close to 250 doors across all of the various bits and pieces that they have in their business. And those all provide alternates for consumers to go and shop in. We've managed to go from a solid negative like-for-like where we were into strong positive like-for-like growth. And I think that that is just proof positive of the steps that we are taking. And, you know, our turnaround has to be considered, it has to be measured, and it has to be methodical. And as I said earlier, this is not about quick wins. You know, this is about future fitting the company going forward, because the real market
the other day. So very, very well done on getting people talking. In terms of your capital allocation priorities, Sean, what do those look like in the now current financial year?
You know, certainly from a capital application perspective, we obviously don't have monstrous, endless amounts of capital. For me, it's more a case of the quality of stores and not the quantity of stores one has. We still have great geographic locations in Pick and Pay that we need to reinvest in, both at a human level as well, so we can see that even in stores where we haven't deployed physical capital, we've seen significant turnaround just by re-energizing the experience and the energy level in the store. And we will now start cleaning up on a very programmed way some of the key core trading estate we have. You know, stores like the waterfront, you know, there's a key store for us. We're waiting for council sign off on plans. That's all done. You know, Canal Walk, I can go through. We've got stores like this where we're going to be redeploying. Last year we put 500 million in. We're going to put $1 billion in the year ahead. So I think the customers are going to start to see reinvigoration of some of our key trading stores.
All right. Well, thank you so much for your time and for your insights there, Sean. Really, really appreciated. That was Pick and Pay CEO Sean Summers.